Hello traders, and welcome to the weekend update here for Sunday, January 21st, 2024. So we had two trades that closed out this last week. Let me bring those two down here so we can take a look at them. And these have now been moved to the closed archive circle in the trade group. So go down and you can see all the details about these trades, every adjustment that was made, etc., in the closed archive area. So the first one was the Google wheel strategy. Basically, I just let that stock get called away at this point because this wheel strategy had been through a complete cycle. Many months ago, I started selling puts on this trade. This is back in July, as we can see here. Started selling short puts on that position until I got assigned Google stock. At one point, I got assigned Google stock. Once I got assigned stock, I started selling calls against that stock, and I would roll those calls out a month and in some cases up in value as well to bring in more premium. I could have done that again. I could have rolled the short calls out and up again if I wanted to keep this position alive. Or I could reestablish the position right now if I wanted by going back and starting to sell short puts again and kind of starting that life cycle all over. But again, the goal was to show people how that process works. So I've done that now. It is in the archives. People can go back through that and see that process in detail. So that's the Google trade here. Then the second one that was closed out was a condor trade. It was an all-put condor in SPX, and that one closed out for a little over a 5%, 5.5% profit. So not great, but in a lower volatility environment like we have right now with a market that is moving up hard, and we're doing essentially what I would consider to be one-sided trades, more bullish-focused butterflies. That's not a bad return for a short amount of time. Particularly when you have no upside risk associated with the trade. And that's what some of our other trades are like here right now, our current other trades that are open. So this trade is up about 5%. And if the market continues its rally, I'll do some more rolling of this right wing, and at some point probably roll up the lower wing as well to keep our risk down here under control. It'll be the same story here. This wing's already been rolled up a little bit. And again, we'll repeat the same process here if the market kind of stays at this elevated level or moves up. And this one's further out. This one is all the way out on March 1st. But again, the process will essentially be the same here on this trade as well. Now, when I did the survey, a couple things that came up in the survey about the types of trades. I'd like to get some different trades worked in here. One of the trades that can sometimes work in this environment is a butterfly with a long call. So let me drop that down in here and share that with you. That trade is many times made in SPX, or in the rut. It needs to be made in a larger index, and I'll show you why here in a moment. But a couple things that you'll notice here in looking at this trade is this has, if you trade it in rut and you trade it in a manner that it's designed to be traded in, it has a much higher risk than the standard $2,500 that I've strived to keep our trades within. And I'll show you why in just a second here. Basically, you put on a neutral or a flat butterfly kind of near the money, and then you buy a long call as close in as possible to your butterfly structure. You don't want it to be too far out. Ideally, you want it to be almost just where this upper wing is, around the 1950 range. That way you won't end up with a valley of death, because as time progresses, the T0 is going to mound up there and it's going to drop out here. And we don't want to be up here if that long call starts losing too much value. So that's why we want the long call to be in as close as possible so it will hold this T0 line up on the right side, and we won't end up with a sagging sort of line if the market blasts up on us. Now, here's the challenge with this. If I try to do this, the logical question is, well, why don't you do it in SPY, or why don't you do it in IWM instead of the RUT? And here's the challenge that trade runs into. So the challenge with trading this in IWM is we're looking for about a 10% gain in value. Now, 10% of this $1,500 in risk that I'm looking at in this trade, even if I were to enlarge that to 2,500, now the 10% is going to be $150 to $250. If you have commissions, now I'm using commissions here of $1 a contract. I'm sure that very few people are probably paying $1 a contract. So I'm going to use 50 cents a contract, even if you cut that in half. With the number of legs we have here, that's 80 legs. So, that's, if you're paying $1 a contract, that's $80 in, $80 out, plus another couple bucks for this guy up here. That's if there's no adjustments in this trade. If there's no adjustments at all in this trade, you still have, again, depending on your commission structure, somewhere between $80 and $160 in commissions. If you go and have to move this butterfly, so if our market rips up here, a standard move is that we take this whole butterfly off and we move it to a higher level. Well, at that point, you've just doubled those commissions. So this becomes an extremely commission-intensive trade. And if you're shooting for only a 10% return on this trade and you have that many legs and that much commission, it's very, very difficult to get that out of an ETF, a smaller priced ETF. However, of course, if we take the same scenario here, and we're looking at 10%, well, 10% is $1,500. So if I have to spend $150 in commissions on this, not a problem. It's just part of the, part of the process, part of the game. So my question to you as subscribers is that, again, in the survey, people indicated they didn't care what size trades were done in. The vast majority of people didn't care. I would like to ask you to respond below in this weekend update and let me know your thoughts on this. Again, this is a trade that I'd like to put on and show people and follow through on the process, but it's not going to conform to the normal $2,500 in risk or so that I'd like to try to keep intact. So again, please give me your comments on that down below as a possible trade to consider here in the coming weeks. Now, let's look into our market and kind of what's transpiring in our markets at this point. If we look at a weekly chart, so right now I'm looking at a weekly chart of the SPX. This goes all the way back here to January 3rd of, that was January 3rd of 2022 was our last high right here at that 4,820 mark. Now, remember I told you that my expectation here was that, let me move this now to a daily bar, and we'll go 3 years a day. As I told you, my expectation was we've been making higher lows and higher highs here. So we're definitely in an uptrend as we go through this market. And I also indicated that I was expecting a little bit of maybe some consolidation and chop here between the 4,700 and 4,800 area. And then my expectation was that we would ultimately pop through, and that when we pop through, if that pop through holds for a day, 2 days, we're off to the races, and I think that we could easily look at certainly 100-point wave up, because the prior waves here were about 100 points. So it's not uncommon once you break through that you're going to end up with waves up here to around 4,900. A even more bullish case could be made that this wave is much larger here, okay? So 4,500 to 4,800. So that's about a 300-point wave that we could potentially be looking at here. So the bottom line is, if this holds for another day, if this holds on Monday, if we stay above that 48.20 mark or so, I think we're probably going to be looking at a decent continued up move. We can also see that volatility is dropping here. Fear is leaving the market again. Again, there's a lot of political things out there, as well as, of course, different war events, global socioeconomic things that could impact this. But right now, the markets aren't seeming to care, and we're definitely in a bullish mode. So another possible trade that I'm going to be looking at this next week, which also was indicated in the survey, is that people wanted to maybe see some directional trading. So I may be looking at, if it looks like this breakout is going to hold, I may be looking to add in a directional bullish trade as well. Obviously, those are going to carry more risk to the downside if we do in fact get a pullback. But those are the couple things that I'm looking at. Now, one other thing I want to look at here, you don't get volume in SPX, but many times volume can be an indicator of how strong a move might be. So let's just look at its counterpart, SPY. Also, obviously, as we can see, breaking out here. But look at this volume that's coming in there on SPY on that breakout. That's some pretty darn significant volume. And again, my expectation, if the market holds on Monday, my expectation is we might even get more volume coming in as people are jumping on this breakout. Again, that remains to be seen, but that's what I'm going to be looking for on Monday, is to see if we get that even larger breakout. In addition to that, I also, again, we looked a little bit at volatility and the drop in volatility, but we can see that in detail here if we take a look at the VIX. And again, that's kind of charted down below, but we can see that VIX started to get a little stronger, but then it's cratering back down. If our breakout holds, we're going to come right back down here to that 12 line or so in VIX. And when volatility is low, when volatility is high, that's when we want to be selling options. We want to be selling butterflies, condors, those types of things where we are selling premium. We're selling the fear in the market. And when volatility is low, options are cheaper. If you're going to buy options, if you're going to buy long calls in something, or you're going to buy a long call spread, when volatility is down and those options are cheaper, that's the time that we want to do those types of trades. Again, sort of putting in some bullish trades into the mix when our market is obviously in a bullish mode. So that's kind of the wrap up for the weekend update here on January 21st. Again, I'll look forward to your feedback in the comments down below. And those of you that might be watching this on YouTube, if you want to join in with us, please look for a link down below as well about the service. I also offer a free about an hour and 20-minute class on options, how options can be used by traders in a variety of different scenarios. So if you want to see more about that as well, just click that link down below and you'll have access to that free class also. So thanks so much, everyone. Appreciate your time, and we'll see you in the trading room next week. Take care.